Am I audible? Everybody. Now let us start with next head of income, Pgbp. See, this is the biggest head of income out of total revenue that is received by government. At least 60% of the income tax, 60% of the revenue from direct taxes will be received by government from business or profession. That's why this head is vast, as most of the revenue is received from business persons and professionals. Many rules were framed with regard to taxability of income from business or profession. That's why this is the lengthiest head of income among all heads. The reason is this is the head through which the government gets most of the revenue. Before we proceed further, let me give an introduction to Pgbp. Pgbp is nothing but preparation of P&L, arriving at the profit, arriving at the income from business. Whatever the income that we calculate in accounts also we will prepare P&L for business, right? Like from intermediate first year onwards, you are doing preparing P&L accounts. Whatever the net profit as per accounts is there, on that net profit you are not required to pay taxes. Under income tax, we are going to recalculate the net profit. Whatever the net profit that is recalculated as per Pgbp provisions, on that net profit you are required to pay taxes. So many of the students are under the wrong notion. They think that whatever the net profit under accounts is there, that is Pgbp income, on that tax is required to be paid. But that contention is not correct. That contention is wrong. On accounting net profit, we are not going to pay taxes. Under income tax, many rules are there. Some of the expenses are allowed as deduction. Some of the expenses are not allowed as deduction. Some of the incomes are taxable under Pgbp. Some of the incomes are taxable under other heads of income. So what we will do, for us, base is accounting net profit. We will take accounting net profit. To accounting net profit, we are going to do adjustments. After doing all the adjustments, we are going to arrive at income tax net profit. Income tax net profit is nothing but Pgbp income. On that income tax net profit, we are required to pay taxes. Are you able to understand? So Pgbp income is nothing but net profit in the business, but whatever the accounting net profit is there, that is not final. We do not pay taxes on accounting net profit, but we will take accounting net profit as a base. We will do adjustments as per Income Tax Act. After doing adjustments, we are going to arrive at income tax net profit. On income tax net profit, we are required to pay taxes. So whatever the income tax net profit is there, that income tax net profit we call as Pgbp income. See, any income from business or profession. If you are doing business or profession, definitely you are going to prepare P&L account in your books of accounts, right? If you are salaried employee, you will not prepare P&L account because there is no concept of profit or loss. Entire salary is income. If you are getting pension, you do not prepare P&L account because entire pension is income. You are getting interest on dividends, income from shares, income from bonds or debentures. Entire interest is income. There is no concept of P&L, correct? So that's why, however, when you are doing business, when you are doing profession, whatever the sales amount that you have received or whatever the gross receipts in the profession are there, that is not income, that is just revenue. Am I correct or not? So revenue is different from income. Revenue is gross receipt. From that revenue, we are going to claim all the expenses. After claiming all the expenses, we are going to arrive at the net profit. Whatever the net profit as per accounts is there, that is also not final. For that, we will do adjustments. We will arrive at income tax net profit. On that income tax net profit, we are going to calculate tax liability. So you can see Pgbp problems also. In every problem, he will give P&L account. In total income problem also, in examination, first question is compulsory. That is total income problem, which will be given for 14 marks. There also he will give P&L account as per accounts. We need to take net profit as per accounts as base. We need to do adjustments. We need to arrive at income tax net profit. So the whole PGBP chapter is about calculation of income tax net profit. What are all the adjustments that are required to be made? We are going to learn lot of adjustments. Once you get grip of doing the adjustments, then we will do problems. You will know how to do the adjustments. Once those adjustments are done, we will arrive at income tax net profit, which is nothing but PGBP income. Is it clear? So did you get a prima facie introduction? Did you understand what are all we are going to do in PGBP chapter? Shall I proceed further? Yes. What happened? Remaining people did not come. Now, what are the sections that are covered under the head PGBP? Section 28 to 44. These are the sections that are covered under the head PGBP. Charging section is section 28. You know, right? Every head of income will have its own charging section. Am I correct or not? So charging section for PGBP head is section 28. Next, applicable tax rates. Applicable tax rates are normal tax rates. That means there are no special tax rates that are applicable in PGBP. Only normal tax rates means either default tax rates or optional tax rates. Okay. Whatever the income that is received out of business or profession, that income is taxable under the head PGBP. Is it clear? Out of business or profession, whatever the income that is received. Next question is, sir, what business means? Business can be either trade, manufacture, or an adventure. What do you mean by adventure? Let's say I am not a businessman. I am a salaried employee. But I have 300 square yards of land. In that 300 square yards of land, I constructed 10 flats. I sold 10 flats. That means my main activity is not business. Still, I got one opportunity. Through that opportunity, I made business, I earned money. That we call as adventure. Are you able to understand? I'm a normal man. I got an opportunity. I conducted exhibition for 2 months. Then I closed the exhibition. I made money out of it. Then normal office work I am doing, working as a salary. That means adventure means what? Any one event because of which business income is generated by an individual. Even that income is also taxable under the head PGBP. Are you able to understand? Next, income from commerce. Commerce means what? Trade in a very large scale. That we call as commerce. So, like income received out of trade, manufacture, or by an adventure or by commerce, all these incomes are taxable under the head PGBP. Is it clear? Next, income from profession. You all know profession. Profession always is backed by some educational qualification. That means what? An individual should go through certain curriculum. He should clear that curriculum and he should go through some practical exposure based on which he will get a qualification. So profession is always backed up by some qualification. Out of profession also, if any income is received, lawyer, doctor, chartered accountant, company secretary, engineer, okay, architect. So whatever the income received by these people is there, that income is received out of profession and that income is taxable under the head PGBP. Profession includes vocation. What do you mean by it? Vocation means vocation is not backed up by any educational qualification, but by doing an activity over a period of time, individual will get experience over it, individual will get skill over it, that we call as vocation. See, you have taken formal coaching in singing, thereby you became singer. Now for you singing is profession. There will be some people who do not take any coaching in singing, they naturally sing and they will earn money. Okay, so out of natural singing, if they are earning any money, then we call it as vocation. Are you able to understand? Astrologers are there, okay, soothsayers are there, priests are there. Okay, by doing an activity over a period of time, they will get skill over that activity, and thereby they will start earning the income without any proper educational qualification. Then whatever the income earned by them is there, such income is taxable under the head Pgbp. Their profession we call as vocation. Carpenter is there. By doing that activity over a period of time, he gets a skill over it, he know how to handle the carpentry work. Okay, that income received by him, it is taxable to him under the head Pgbp. He did not take any formal coaching for carpentry. Similarly, barber is there. Okay, by doing many shavings, haircuts and all, he got skill over it. He did not go through any formal training. If he joins in any academy and if he gets training as to how to do everything and all, then we can call it as profession. Without backed up by proper educational qualification, but by doing an activity over a period of time, if an individual gets skill over something and thereby he starts earning income, then we call that activity as vocation. Profession includes vocation. That means not only from profession, even from vocation also, if any income is received, such income is taxable under the head Pgbp. Is it clear? Next. You know, in Mumbai, uh, they like income tax department found out that there is one beggar. That beggar is owner of two flats. That means by begging he earned income, and through that income he purchased two flats. Now income tax department considered begging as vocation and they taxed those two flats fair market value as income under the head Pgbp. Is it clear? So everything which is not backed by educational qualification will get covered under vocation, and that income is taxable under Pgbp. Even begging also comes under vocation. So any activity which is not backed by educational qualification, but by doing that activity, if an individual gets skill over something and if he starts earning income, then we call it as an occasion. Is it clear? So basically income received out of business or profession is taxable under the head Pgbp. Profession includes vocation also. That means not only from profession, even from vocation also, if any income is received, such income is taxable under the head Pgbp. Manandi. Dividend and interest. These two things are tax. Dividend and winnings, I'm sorry. Dividend and winnings are always taxable under income from other sources. Traffic lo irkupoyina vaadu ippudu vachadu. See, there will be winnings, right? Dividend income will be there, right? These two are always taxable under income from other sources. So other than these two remaining incomes received out of business or profession, they are taxable under the head Pgbp. Is it clear? Now, whatever the income from business or profession is there, whatever the bad debts are there, even if bad debts are received in future after the closure of business, still those incomes are taxable under the head Pgbp. That means what? If there is any recovery of income that was gained through business or profession in future period, even though business is closed, still whatever the income that is received is there, that income is taxable under the head Pgbp. For example, there is an individual, give me 1 second. There is an individual whose name is Raj. Let's say he took admission in KS Academy. They said fees is 60,000 rupees. but he said his background, he requested, sir, 60,000 is a huge amount for me because of my economical conditions. Please reduce it to 40,000. Like, the administration did not tell this to anything. Secretly, they gave concession 40,000 rupees to Raj. Then after he became chartered accountant, by the time he became chartered accountant, for example, KS was closed. Okay. Even after closure of KS, like this guy became chartered accountant, right? After becoming chartered accountant, he remember the management of KS. He thought, once upon a time they gave me concession of 20,000 rupees. Now I'm earning well. So he got back. He met management of KS after closure of business, and he gave back 20,000 rupees along with interest. Now, from the founder of KS hands, the 20,000 rupees income is received after closure of business, which is relating to business. That 20,000 rupees is income, and that is taxable under the head Pgbp. Is it clear? Are you able to understand? Now, next. Just give me 1 second. Now, let us slowly go into the subject. What I said, we will take accounting net profit. Am I correct or not? We will take accounting net profit. We will do certain adjustments. Thereby, we will arrive at income tax net profit. On income tax net profit, we are going to calculate tax liability. There are mainly 4 adjustments that we will do for accounting net profit to arrive at income tax net profit. See, I did not go into Pgbp yet. I am just explaining the overview. It will take more than half an hour for me just to explain the things how will be there in Pgbp. Then slowly I will get into the subject. Okay. Now, let's say we will take accounting net profit. After taking accounting net profit, first adjustment is we will add back disallowed expenses. What will we do? We will add back disallowed expenses. This is the first adjustment that we will do. Shall I explain what disallowed expenses means? P&L account is like this, accounting P&L account. Sales 80 lakhs, expenses 60 lakhs. Under income tax Pgbp, there is one rule. More than 10,000 rupees payment, if you make to a single person in a single day in cash, that expenditure is not allowed as deduction. What do you mean by this? Carpenter came, he did some carpentry work. After doing carpentry work, he asked me at the end of the day 12,000 rupees is his fees. That means for doing that carpentry work, what is the labor charges? 12,000 rupees. I paid 12,000 rupees in cash to carpenter. That 12,000 rupees is expenses for carpentry work. Generally in P&L account, what we will do? Expenses for carpentry work account debit to cash, P&L account debit to expenses for carpentry work. This is the entry that we will pass. Am I correct or not? So in accounts, you are claiming expenses for carpentry work as a deduction. In accounts, you are debiting it to P&L account. Am I correct or not? When you debit it to P&L account, you are claiming it as expenditure. But under income tax, that expenditure is not allowed as deduction. Is it clear? So under Pgbp, there are certain conditions. There are some rules. Okay. If those rules are not satisfied, that expenditure will not be allowed as deduction. One of the rule is payment made to single person in a single day more than 10,000 rupees in cash. If you are making payment of more than 10,000 in cash, then that expenditure is not allowed as deduction. That rule we are going to study down the line, but I am giving preface, I am giving prima facie examples to understand Pgbp better. So there are certain expenses which are not allowed as deduction under PGBP head. Provision for bad debts is there. In accounts, it will be debited to P&L account. It is allowed as expenditure. Under income tax, provision for bad debts is not allowed as deduction. Depreciation is there. Under accounts, depreciation is calculated differently. That expenditure is allowed as deduction. Under income tax, accounting depreciation is not allowed. Income tax depreciation is allowed. That means you need to understand there are certain expenses which are allowed under accounts but are not allowed under income tax. Those expenses we are going to disallow under income tax. Just look at the screen. Let's say carpenter expenses. How much? Carpenter expenses 12,000. Correct? How much is my net profit? Please calculate and tell me. How much net profit? 80 lakh minus 60 lakh 12,000. I think 19 lakh 88,000. 80 lakhs, right? How much is my net profit? You're all having calculators. Tell me. 19.88 lakhs. Am I correct? This is accounting P&L account, right? Let us prepare P&L account for income tax also. Under income tax P&L account, sales is 80 lakhs, expenses 60 lakhs, carpentry expenses. Are they allowed as deduction? They are not allowed as deduction. Net profit is 20 lakhs. Am I correct or not? Instead of preparing P&L account from the beginning, in this there is only one adjustment, carpentry expenses. Instead of preparing P&L account from the beginning, what I will do, I will take accounts net profit. Accounts net profit is 19,88,000. Carpentry expenses 12,000. Is it allowed as deduction? It is not allowed as deduction, right? Disallowed expenses. What is the tax treatment? We need to add back. So what I will do, I will add disallowed expenses. Add disallowed expenses 12,000. Thereby I will arrive at PGBP income. Matching, right? That means what? Under income tax also, you can prepare P&L account separately. But instead of preparing P&L account from the beginning, what you are doing, you are taking accounts net profit as a base, you are doing adjustments, you are arriving at PGBP income. First adjustment is disallowed expenses. Those expenses which are allowed in accounts but are not allowed in income tax. What is the tax treatment for disallowed expenses? Tax treatment for disallowed expenses is add back. You can cross check also. If you prepare income tax P&L account, same net profit you will get, income tax net profit. So tax treatment for disallowed expenses is you need to add back. So down the line, whenever we are doing problems, I will tell one thing. Whenever I say expenditure is disallowed, I will add back in calculation of PGBP income. At that time, you should not ask me why I added back, because now itself I am telling you the reason. Disallowed expenses should be added back. Thereby you will arrive at income tax net profit. You can prepare independent income tax P&L account also. Same net profit you are going to arrive. Are you able to understand? Basic logic. Expenditure, net profit. Income, net profit. There is a direct relation between income and net profit. Do you agree with me? If income increases, net profit also increases. If income decreases, net profit also decreases. Am I correct or not? For example, let's prepare P&L account. Sales 100 lakhs, expenses 40 lakhs, net profit 60 lakhs. Let's say sales increased by 20 lakhs. Net profit also increases by 20 lakhs. Am I correct or not? Sales decreases by 10 lakhs. Net profit also decreases by 10 lakhs. Am I correct or not? So what is the relation between income and net profit? Whenever income increases, net profit also increases. Whenever income decreases, net profit also decreases. So did you understand the relation between income and net profit? Shall we analyze the relation between expenditure and net profit? Everybody, shall we analyze? There exists indirect relation between expenditure and net profit. Do you agree with me? Whenever expenditure increases, net profit decreases. Expenditure increases, net profit decreases. Expenditure decreases, net profit increases. Am I correct or not? Let us prepare one P&L account. P&L account. Sales 90 lakhs. Expenditure 60 lakhs. How much is my net profit? Net profit is 30 lakhs. Let's say expenditure is increased by 10 lakhs. Expenditure is 70 lakhs. Then will my net profit is 30 lakhs? How much is my net profit? Net profit is 20 lakhs. That means net profit decreases by 10 lakhs. Am I correct or not? So there exists inverse relation between expenditure and net profit. When expenditure increases, net profit decreases. When expenditure decreases, net profit increases. Did you understand the relation between expenditure net profit and relation between income and net profit? Now let us analyze peacefully. For example, carpentry expenditure, this is not allowed as deduction. Am I correct or not? Not allowed. Whenever it is not allowed, expenditure is increasing or decreasing. Whenever you do not claim 12,000 rupees, whether expenditure increases or decreases. Tell. You are not claiming 12,000 as expenditure. If you do not claim, if that expenditure is not allowed, if that expenditure is disallowed, whether expenditure increases or decreases. Expenditure increases. Expenditure decreases. Whenever expenditure decreases, net profit increases. That's why we are adding back. Did you understand the logic? Whenever expenditure is disallowed, expenditure decreases. Whenever expenditure decreases, net profit increases. That's why what will we do? We will add back the disallowed expenses. Now did you understand the first adjustment? What is the tax treatment for disallowed expenses? Add back. Disallowed expenses are to be added back at the time of calculating Pgbp income. Logic is, when you disallow the expenditure, expenditure decreases. Whenever expenditure decreases, net profit increases. That's why you are calculating income tax net profit. Under income tax, expenditure is not allowed, expenditure is disallowed. Whenever expenditure decreases, net profit increases. Did you understand? Shall I proceed further with regard to second adjustment explanation? Everybody, did you all understand first adjustment? Any doubts? Second adjustments. We will reduce disallowed incomes. We will reduce disallowed incomes. Fan button disallowed incomes or incomes taxable under other heads of income. Or incomes taxable under other heads. Shall I start explaining the second adjustment? Everybody, వద్దా వాడేంటి అడ్డంగా తలూపుతున్నాడు? Now, P&L account is like this. Look at the screen. Amma. Sales 120 lakhs. Expenses 85 lakhs. How much is my net profit? Oh, hold on. I have rental income from house property. Rental income from house property 15 lakhs is there. How much is my net profit? Calculate and tell me. My net profit is 50 lakhs. Correct. Do you agree? See, who will prepare accounts? BCom guy will prepare accounts, correct? Or those who are expert in preparation of accounting, they will prepare accounts. There is no mandatory condition. Those who are preparing accounts will also know income tax, correct? So those who are preparing accounts, they may not know income tax. They are expert in doing accounting, but they may not be expert in income tax. So accounting person do not have knowledge about income tax. I should not say do not have. Accounting person may not have knowledge about income tax. Generally, from house property, if any income is received, it is not taxable under Pgbp, it is taxable under the head income from house property, because charging section clearly says asset should be house property, it should be owned by the SSC, it should not be used for business. Then whatever the rental income from house is there, it is taxable under the head income from house property. I have a house, I am also a chartered accountant in practice, but whatever the house that I am having, I am not using for practice. I gave it on a rent to tenant. From tenant I am getting rental income. Now whatever the rental income received from tenant, even though I am doing profession, still rental income from tenant is taxable to me under the head income from house property. Am I correct or not? But accounts person, what he will do, whatever the income he gets, he will just credit it to P&L account. Am I correct or not? Even rental income also he will credit it to P&L account. But that is not his mistake. In accounting we will do like that only. But we are taking accounting net profit as a base. We are calculating income tax Pgbp income. Under income tax Pgbp income, whether rental income is taxable under the head Pgbp? No. Rental income is taxable under the head income from house property. Am I correct or not? So rental income from house property is there. This is not taxable under Pgbp. Do you agree with me? Not taxable under Pgbp, but it is taxable under income from house property. Do you agree with me? That means in income tax P&L account, should you credit rental income? You should not credit rental income to income tax P&L account. Do you agree with me or not? So what will we do now? It was already credited to P&L account in accounts. When we are preparing income tax net profit, we are going to disallow it. Do you agree with me or not? We are going to disallow the income because it is not taxable under Pgbp, it is taxable under some other head of income. Winnings is there. Winning from betting, gambling, horse races. I told you in first chapter, winnings are always taxable under other sources. Tax rate applicable is 30%. I am a chartered accountant in practice, but I did betting. In betting I won money, but my accountant credited it to P&L account. Should it be credited to P&L account? No. It should not be credited to P&L account. It is taxable under income from other sources. I cannot explain this to my accountant because he has only accounting knowledge. He does not have income tax knowledge. Even though I explain to him, he will not understand. So what I will do, I will take his profit, accounting profit. I will make adjustments. What is the adjustment that I will make? Whatever the winnings amount credited to other sources is there, that is not that should not be considered as income under Pgbp. So it is to be disallowed from Pgbp head. So what I will do, I will make the adjustment disallowed income. See, this is income side, right? Oh my God. How much are sales? 120 lakhs. Rental income from house property 15 lakhs, correct? So this 50 lakhs, if I disallow, whether income increases or income decreases? Income decreases. Whenever income decreases, net profit also decreases. Am I correct or not? That's why when we are preparing income tax Pgbp income, when we are calculating income tax net profit, if there is any income in accounts P&L account that is not taxable under Pgbp, but it is taxable under any other head of income, we will disallow it and we will reduce it while calculating net profit. Are you able to understand? So here what is the tax treatment? Tax treatment is less. Why are we reducing it? Because if income is not taxable under Pgbp, if income is taxable under other heads of income, that income should not be credited to P&L account. That income should not form part of Pgbp income, but it was already form part in accounts. But we should not allow in income tax. We will disallow it. Whenever we Disallow income, income reduces, thereby net profit also reduces. So in P&L account, if you find any income which is disallowed while preparing PGBP income statement, what is the adjustment that you will do? You have to reduce. Is it clear? So income taxable under other heads of income, tax treatment is reduction while you are calculating PGBP income. Is it clear? Did you all understand second adjustment? Everybody? Disallowed incomes. What do you mean by disallowed incomes? I sold one asset. Generally, if asset is sold, capital gains had gets attracted. But accountant does not know. He created it to P&L account. Whether sale of asset income, should it be created to P&L account? It should not be created to P&L account. What I will do now, I will disallow it. Whenever that sale of asset income is disallowed, that should not be created to P&L account. Whenever it is disallowed, automatically income reduces. Whenever income reduces, net profit also reduces. So whatever the sale value of asset is there, while calculating PGBP income, I will less. Are you able to understand why I am reducing? Because that should not be created to P&L account. Any confusion? No confusion, right? See, there is no rocket science in it. If you know how to play with expenditure and net profit, how to play with income and net profit, you know how to calculate PGBP income. Very easy. Why I am saying in the beginning is, many faculties, they will start explaining the sections whenever they start PGBP. I don't want to explain the sections in the beginning. I just want you to know how we are going to play and how we are going to win in PGBP. In PGBP, section is not asked. They will not ask write about section 32, section 35. They will ask only practical, implementation. This is how we are going to practically implement PGBP. First of all, you should understand what PGBP is, how we are going to practically apply it. Once you understand how to practically apply it, then if I start explaining each section you will think in this format only. I said building expenses. Whenever I say building expenses is allowed as deduction, no adjustment is required. Whenever I say building expenses are not allowed, immediately it will strike in your mind, expenditure is not allowed, expenditure is disallowed. So when we are calculating PGBP income, that type of expenditure we will add back, correct? So every section that you are going to listen later onwards, you should listen only from this table point of view, because ultimately we are going to prepare PGBP income statement, and for that PGBP income statement there are only 4 adjustments. With regard to these 4 adjustments only, we are going to discuss the entire head of PGBP income. Okay, so did you all understand second adjustment? Okay, I will give another example, because today is foundation class, not CA foundation class for PGBP. You need to get much more clarity. If you miss today's class, you will not understand PGBP. That's how crucial this class is. P&L account. In P&L account, accountant prepared like this. Sale of stock 60 lakhs. Sale of asset 10 lakhs. Sale of asset 10 lakhs. Expenditure 45 lakhs. How much is my net profit? My net profit is 25 lakhs. This is accounting P&L account. As per income tax, will you credit this to P&L account? Sale of asset, will you credit it to P&L account? No. Why? Because it is not taxable under PGBP. Whenever you sell an asset, it is taxable under capital gains. So you should not credit it to P&L account. What you will do? You will disallow it. So whenever 10 lakhs is disallowed, 10 lakhs income is getting reduced. Whenever 10 lakhs income is reduced, net profit will also reduce by 10 lakhs. Am I correct or not? So then net profit will be 15 lakhs. See, for one adjustment, preparing income tax P&L account is easy. If you are having 20-30 adjustments, if you sit and do, it will be hectic. That's why what we will do, we will take accounting net profit. Accounting net profit is 25 lakhs. Then from this income is disallowed, right? 10 lakhs is disallowed. What is tax treatment if income is disallowed? We will less it, correct? So if you reduce, you will arrive at Pgbp income, which is nothing but 15 lakhs. Very simple, right? So it's nothing but playing with accounts. Anta ipe kucho nuvu. Pgbp is all about this only. You will take accounting net profit. You will start playing with accounting net profit. How well you have played, how correctly you arrived at income tax net profit. That's the only thing in calculation of Pgbp income. Okay. So did you understand second adjustment, everybody? Shall I explain third adjustment? Till here, do you have any doubts? No doubts, right? Next. Expenses not allowed under accounts but are allowed as deduction under Pgbp. But are allowed as deduction under Pgbp. This type of expenditure we are going to reduce. My dear students, today's class is very crucial. Next half an hour is very crucial. Please listen very carefully. This is the foundation for entire Pgbp. Capital expenditure. Generally, whether capital expenditure is allowed as deduction in P&L account, I purchased one laptop worth 80,000 rupees. Can I claim total 80,000 in P&L account in the first year? You know what capital expenditure means, right? The expenditure that gives benefit for more than 1 year, that expenditure we call as capital expenditure. Please don't expect me to teach accounts. Teaching income tax is only, a bit complex. You know capital expenditure. I purchased one laptop. From this laptop, I am going to get benefit for next 3 to 4 years. So expenditure on laptop is not revenue expenditure, it is capital expenditure. Capital expenditure is not allowed as deduction in P&L account straight away. It is allowed as deduction in the form of revenue expenditure, which is depreciation. Depreciation is revenue expenditure. Cost of asset is capital expenditure. So capital expenditure is allowed as deduction in the form of depreciation, which is revenue expenditure. So my intention of telling this is total cost of the asset is not allowed as deduction in P&L account in the first year itself. It is allowed as deduction progressively over the lifetime of the asset by following the method of depreciation. Am I correct or not? But there are some sections under income tax in Pgbp which will allow entire capital expenditure in the first year. There is one section, section 35. It speaks about scientific research. They will tell for scientific research, if you incur any capital expenditure, 100% of the capital expenditure is allowed as deduction in P&L account, just like revenue expenditure. That means what? For scientific research, I purchased laptop worth 1 lakh rupees. Total 1 lakh is allowed as deduction in P&L account in the first year itself. In accounts department, I purchased a laptop worth 1 lakh rupees. 1 lakh rupees is not allowed as deduction. Depreciation on laptop is allowed as deduction. That means there are certain provisions in Income Tax Act which will allow 100% of the capital expenditure in the first year itself. Unlike in accounts. In accounts, we will claim only depreciation. Let's say 10% is depreciation. Under accounts P&L account, 10% is debited to P&L account. Under income tax, 100% is debited to P&L account. That means balance 90% in accounts allowed as deduction in remaining years. Under income tax, total expenditure is allowed in first year. Are you able to understand? So if there is any additional expenditure which is specially allowed in income tax, that additional expenditure is reduced while we are calculating Pgbp income, because we are claiming extra 90% expenditure. When we claim extra 90% expenditure, net profit will also decrease by 90%. So that's why we are reducing while we are calculating PGBP income. Is it clear? Did you understand or not? So if there are any, see, even though you do not understand, we are going to discuss the concept, we are going to do the problems. At that time, we are going to get the clarity. But I am explaining you the methodology. If there is any expenditure which is allowed extra in income tax P&L account over and above accounts P&L account, that extra expenditure, what we do when we are calculating PGBP income, we will claim that extra expenditure, we will reduce it from accounting net profit. Is it clear? See, if you do not understand this, I will tell another simple thing. Income tax depreciation. Accounting guy, does he know how to calculate depreciation under income tax? He does not know how to calculate depreciation under income tax. In accounts P&L account, accounts depreciation was debited. What will we do? We will add back accounts depreciation, because accounts depreciation is not allowed under PGBP. Depreciation expenditure not allowed. If expenditure is not allowed, if expenditure is disallowed, what is the tax treatment? Add back, correct? So accounting depreciation we will add back while we are calculating PGBP income. We will specially claim income tax depreciation. So income tax depreciation is not debited to P&L account in accounts, but it should be debited to P&L account under income tax. Do you agree with me or not? So that income tax depreciation is extra expenditure allowed over and above accounts depreciation, or allowed apart from accounting depreciation. Do you agree with me? So income tax depreciation we will reduce while we are calculating PGBP income. Very simple. Any expenditure which is not allowed under accounts but is allowed under income tax, that expenditure while we are calculating PGBP income, what is the tax treatment? We will reduce. Is it clear? Did you all understand third adjustment as well? Everybody? So disallowed expenses, what is the tax treatment? Add back. Disallowed incomes, yeah, reduce or subtract. If there is any extra expenditure which is not allowed in accounts but is allowed under PGBP, for that extra expenditure tax treatment is we will subtract while we are calculating PGBP income. Is it clear? So till here are you clear? Everybody? Next. Incomes which are not got taxed under accounts but are taxable under PGBP. But are taxable under PGBP. We will add it. We are going to add it. Under income tax provisions, there is one income. For example, bad debts are there. Bad debts are 10,000 rupees. Really, I got bad debts. I claimed 10,000 as expenditure in P&L account in accounts. Income tax officer did not give permission to claim it as expenditure in income tax net profit. That means bad debts expenditure was not allowed by income tax officer. Now what I will do? That expenditure is not allowed. What I will do? I will add it as an income. Are you able to understand? So if there is any amount which was not taxed in accounts but is taxed under income tax, okay, that should be added while you are calculating PGBP income. Are you able to understand? So what you will do? You have two options. Accounts P&L account. Sales 50 lakhs, expenses 38 lakhs, bad debts 1 lakh, net profit is 11 lakh. Income tax P&L account, you have two options. Either don't claim this as expenditure. If you claim this as expenditure, write corresponding income 1 lakh. Then it will get knock off. Am I correct or not? So there are certain incomes which are not taxed under accounts but are taxed under income tax. For example, I told one point. Whenever capital expenditure is incurred for scientific research, 100% of the expenditure is allowed as deduction in first year. Do you remember? I purchased a laptop. Total 1 lakh is allowed as deduction in first year. In accounts, only 10% depreciation is allowed. But the thing is, there is extra point. What is that extra point? If you claim 100% expenditure in first year and subsequently if you sell the asset, sale value of asset is to be taxed under Pgbp. That is the rule. Are you able to understand? I told 1 lakh rupees I claimed in first year. In second year I sold the asset for 75,000 rupees. 75,000 is taxed under Pgbp. Generally on sale of asset capital gains will arise. But here what is he saying? Whenever you claim 100% expenditure and sell the asset, credit it to P&L account. The same tax treatment you will not give in accounts. Under accounts for sale of asset, tax treatment is different. You will reduce book value, balance amount, either you will credit it to P&L account or you will credit it to capital reserve, correct? So under accounts treatment is different, income tax treatment is different. So as per income tax treatment, there is extra income and that extra income is to be credited to P&L account. So if there is any income which is not credited in accounts P&L account, but it should be credited to P&L account under income tax, that type of income you will add when you are calculating Pgbp income. Are you able to understand? So there are 4 adjustments. So after doing 4 adjustments, whatever the ultimate amount that comes is there, that we call as Pgbp income. Are you able to understand? On this Pgbp income, we are going to calculate the tax liability. So this is just overview. I did not discuss any section with you. I did not start the chapter also, but I gave you the methodology how we are going to calculate Pgbp income. See, this is how we should learn. For house property also, I gave format before I explain you the things. For capital gains also, I gave you the format before I explain you how to calculate capital gains. So for Pgbp also, I am giving you the format as to how we are going to calculate the Pgbp income. This method we call as indirect method. Sir, why indirect method? If you prepare P&L account as per income tax, that is direct method. We are not doing from scratch. Under income tax, we are not preparing P&L account from the beginning. What we are doing, we are taking accounts net profit, we are doing 3-4 adjustments, we are arriving at Pgbp net profit. So we are arriving net profit of Pgbp indirectly based on accounts of net profit of accounts. That's why this method of calculation of Pgbp income we call as indirect method. Direct method is simple, calculating P&L account from the beginning under income tax. Okay. So majority of the problems he will ask indirect method only, because indirect method is only tough. Chances of making mistakes are higher. If you, instead of adding, if you reduce, the whole problem will go wrong. Instead of reducing, if you add, the whole problem will go wrong. Direct method anyone will calculate, because it is time taking also. Direct method is, because from every item you need to either debit or credit, you need to take the decision and you need to calculate Pgbp income. So shall we slowly get into the subject? Everybody? No energy, enter energy, went away. So what are the sections that we are going to cover? Section 28 to 44. These are the sections that are covered under the head Pgbp, correct? So out of 28 to 44, charging section is 28. Charging section, section 28. Section 30 to 38. These sections speak about allowable expenses. What these sections speak about? These sections speak about allowable expenses. Next, section 40. Section 40 speaks about conditions for allowability of expenses. Conditions for allowability of expenses. See, under section 30 to 38, there are these sections speak about expenses, right? Whether those expenses are allowed or not, what are the conditions to be satisfied, all those conditions are explained under which section? Section 40. Next, section 41 speaks about deemed profits. Section 41 speaks about deemed profits. Section 44 series. In section 44 series, section 44 AA speaks about maintenance of books of accounts. Section 44 AB speaks about tax audit. Section 44 AD, 44 ADA, 44 AE. These speak about presumptive provisions. This is just overview, how we are going to study route map. So this is overview. Through this we are going to study. First one is charging section. So shall we start discussing charging section, everybody? So it almost took 55 minutes to explain before we start Pgbp. Intro itself took more time, but it is worth. Teaching remaining heads, remaining concepts is one level. Teaching Pgbp is another level. Next, I forgot to tell method of accounting. Under Pgbp head, SSE can follow cash basis or accrual basis, which is regularly followed in accounting. I hope you know the difference between cash basis and accrual basis. Can someone tell? पांडे जी, क्या फर्क पड़ता है कैश बेसिस और accrual basis के लिए? Can someone tell? Can you tell? You will record all the transactions means. Received plus receivable. That's it. Chiptavamma, you're from MPC, you should tell. Mm, okay, but you are not saying the main point. Mukund, will you tell difference between earned and sorry, difference between accrual and receipt basis? Okay, I will tell. Please listen. Not receivable, not that thing. The keyword is earned. Earned means right to receive. Under accrual basis, the key reason to recognize the income is right to receive. Under cash basis, only when it is received, you will record. I agree with you. Under accrual basis, what you need to check is whether the seller or the person who is receiving the income, did he get the right to receive income or not. The moment he gets right to receive that income, that will be recognized in books of accounts. I went to audit, I did the audit, client told me fees will be paid after 10 days. Even though fees is paid after 10 days, the moment I finish the audit, I will get right to receive that particular income. It will be recognized in my books of accounts. I came to KS Academy. I am teaching. Whether they pay me or not, the moment I finish my class, I get a right to receive income for the number of hours that I have taught. This kind of recognition we call as accrual basis. So for income, the basis for recognition under accrual basis is right to receive. The basis for recognition of expenditure under accrual basis is obligation to pay. Month over, electricity bill came. Whether I pay or not, I am obligatory to pay. Am I correct or not? I am liable to pay. So the moment I am liable to pay, the moment there is obligation on me to make the payment of expenditure sufficient, I will recognize it in my books of accounts. Are you able to understand? So under accrual basis, first cash basis, basis for recognition of income, cash receipt, basis for recognition of expenditure, cash payment. Under accrual basis, basis for recognition of income, right to receive the income. It is also called as income earned. Under accrual basis, basis for recognition of expenditure, obligation to pay. We call it as expenditure incurred. Expenditure incurred means what? Like the person who has incurred the expenditure is obliged to make payment to the opposite party. So basis for recognition of expenditure under accrual basis is obligation to pay. The moment you are obliged to pay, whether you pay or not, it will be recognized in books of accounts. Is it clear? I took loan, I need to pay interest, I failed to pay interest. Even though I failed to pay interest, I am liable to pay, I am obligatory to pay. That will be recognized as expenditure in books of accounts. Are you able to understand? That's the difference between accrual and cash. Next, section 28. Income arising to any person by way of profits and gains from the business or profession carried on by him at any time during the previous year. Write down here, except dividend and winnings. Dividend and winnings, they are not taxable under Pgbp, they are taxable under other sources, except dividend and winnings. Shall I explain the next one? Compensation I will explain little later. Let us see the third point. Shall we see the third point? Income derived by any trade, professional or similar associations from specific services rendered by them to their members is taxable under the head Pgbp. What do you mean by this? Please don't think that you need not study after becoming a CA. Even after becoming chartered accountant, you need to daily get updated about the recent provisions. Okay, see, I became chartered accountant in 2021. From that time onwards, if I do not study anything, I am not updated with current taxation rules. I am not updated with current income tax and GST rules. So, Institute of Chartered Accountants of India, it came up with a curriculum. Those who are chartered accountants, even after they become chartered accountant also, like yearly certain hours they need to spend on getting knowledge about the upcoming trends. So like education is continuous. Even after they become chartered accountant also, they should get updated with regard to profession. So the ICAI came up with a scheme called CPE hours, continuous professional education hours. Those who are chartered accountant in practice, every year they should spend 40 hours in learning. So CP seminars will be conducted. Chartered accountant should go there. He need to pay fees. He need to listen the seminar. Then hours will be credited to chartered accountant. Let's say a seminar is going on. I paid 500 rupees fees. I attended 4 hours. Now 4 hours will be credited to me. Every year I need to have credit of 40 CP hours in my account. Otherwise, like institute is going to take action against me. My membership number may get cancelled. That much strict rules are there. Are you able to understand? So even after a person becomes a chartered accountant, he need to continue his learning. So chartered accountant who is in practice, he should learn at least for 40 hours. Those who are not in practice, they should learn for 20 hours. Minimum 20 hours credit should be there in their account. Are you able to understand? In practical, what they will do? They will pay fees. They will go there, sit for 5 minutes. They will eat food over there. They will come back. Like ICA can keep this check. Are they attending or not? ICA cannot keep check of whether they are learning it or not, right? No person will write exam of CA after getting qualified. So what happens? There is a trade association or professional association. So trade association or professional association is providing specific services to its member, providing specific services to its member. I am a chartered accountant in practice. Every year I will pay 5,000 rupees membership fees to Institute of Chartered Accountants of India. This 5,000 rupees is general fees. Every chartered accountant who is in practice is required to pay. Okay, this is general fees. Anyhow, general fees received by Institute of Chartered Accountants of India is taxable under Pgbp. Forget about general fees. Institute of Chartered Accountants of India conducted workshop on GST. Okay, how GST returns are required to be filed. What are the intricacies in GST? What are the problems faced in GST? With regard to all this, GST workshop is conducted by ICAI when GST came into force on 1st July 2017. For that seminar, it charged fees of 2,000 rupees. Now, that workshop is conducted only for chartered accountants. That means professional association, ICAI, is providing specific service in the form of conducting GST workshop to chartered accountants. Is it providing freely? No, it is charging fees of 2,000 rupees. So for providing service, specified service, if any fees is received, that fees is taxable to professional association under the head Pgbp. Is it clear? So any trade association or professional association, even though within its own members, if it provides any special services, for that if it receives any fees, that fees is taxable under the head Pgbp. Is it clear? Did you understand? Trade association, best example. Can someone tell best example for trade association? Hmm? When I'm explaining AOP, BOI, I have told you, भूल गया, सब कुछ भूल गया. पांडे जी, Example for trade association. खाना पीना सोना, रिवाइज नहीं करना, blue shirt, chamber of commerce. Chamber of commerce is best example for trade association. I told you all trade related people, they will become member of chamber of commerce. If they are facing any issues, they will escalate to chamber of commerce. Chamber of commerce will escalate to government of India. It's like an intermediary. So chamber of commerce conducted seminar. Once I gave seminar in chamber of commerce, like with regard to GST, one amendment came. Only with regard to that amendment, I went to chamber of commerce, I gave seminar. So for that seminar, who will attend? Outsiders will not attend. Only members of chamber of commerce will attend. That too, for that seminar, fees is 100 rupees. It is a 2 hours seminar. So like all chamber of commerce trade related people came to that seminar. Like there is real estate amendment which came in GST. I went to that seminar, I explained about that amendment. It took me 1.5 hours. I prepared my PPT, everything. Who will come? All real estate people. They wants to know what the amendment is, what's the applicability is, how tax is going to be calculated. All this they wanted to know. How can they know? Only through qualified people they can know. So they invited me. I went there. I gave seminar. I explained them everything about it. So they paid 100 rupees. Even though they are members of Chamber of Commerce, they paid 100 rupees. They attended the seminar. They got knowledge from me. Okay. Now, real estate person, member of Chamber of Commerce, he received special services from Chamber of Commerce, special knowledge from Chamber of Commerce. For that he paid 100 rupees fees. This 100 rupees fees is income to Chamber of Commerce, that is taxable to it under the head Pgbp. Are you able to understand? So any trade association or professional association, for providing specific services to its members, if any benefit is received, such benefit is taxable under the head Pgbp. So did you understand this point? Shall I explain the next point, everybody? Is the class boring? Because I see many sleepy faces in this class. Am I explaining in such a way that you are getting sleep, or do you feel class interesting? మీతో మాట్లాడి వేస్ట్ రా బాబు, దేనికి రెస్పాన్స్ ఎవరు? నువ్వరా గుండ్రంగా కూర్చున్నావు ఫస్ట్ బెంచ్లో, కాళ్ళు లోపకు. నెక్స్ట్, fourth point. Shall we take some break because I got exhausted? Okay, let's take break of 15 minutes and let's meet again at 11:15 sharp. Okay.